With the UK election and central banks talking about making changes, June has been a really interesting month for financial markets. How do you think that might impact some of our customers' investments?
So there are some interesting moving parts in June. The first was on the UK election, where when you think back to the logic when Theresa May first called the election, you saw sterling strengthen on expectations that a large Tory majority, as was expected then, would translate into somehow a better deal for the UK in the Brexit negotiations. Now we have a situation where the minority government has raised the possibility that we'll end up with a softer Brexit in some way, and this is also being taken positively.
Okay, Richard, so what kind of things have the central banks been saying, and how can you see that affecting things moving forward?
So the central banks have a bit of a policy dilemma. On the one hand, they've had interest rates very low for a very long time, and they'd like to begin to change that. The problem that they have is that they can't be sure just what impact that's going to have on economies that are stronger than they once were, but it's unclear just how strong they really are.
Sure.
So what we've seen in recent weeks is that the central banks, particularly the Bank of England and the ECB, have begun to talk about tightening monetary policy, maybe a little bit sooner than financial markets had expected.
Right.
And that had the effect, to some extent, of strengthening the euro and the pound versus the dollar.
Thank you, Richard. So oil prices have been moving around rather a lot as well. How's that impacted things?
So when we think about the oil price today, obviously we saw it fall quite sharply during the first half of June. And positive for inflation, maybe positive for the interest rate outlook, but again, raising a few concerns about economic growth. So we were a little bit reassured to see it rally back. When we think about oil prices in general, we'd like to see them at a relatively low level. We don't want to see them putting pressure on the consumer too much.
Sure.
But we also want them to be, broadly speaking, indicators that economic growth remains relatively robust.
So, Richard, taking everything you've said into consideration, what can we look forward to in the next few months, do you think?
So we're going into summer now, historically a time when financial markets are a little bit quieter, where returns maybe aren't quite as strong as they are at other times of the year. But the underlying fundamentals still look decent. We still see decent earnings growth, economic growth looks okay. Central banks are talking about maybe beginning to tighten monetary policy, but we guess that occurs at a relatively mild pace. And so when we think about the underlying fundamentals, they still look fine.